I would create one video one time, but I could get paid every single day from making that content. Those YouTube checks got bigger, got up to 25,000, 30,000, 40,000. I just listened to my audience and just only created what they wanted me to create.
You just told me that this is your second year doing 8 figures in your business. You're a tax strategist.
Yes, through and through.
Why YouTube initially?
YouTube is the perfect place to build a brand. So if you want to compete with everybody, sure, just go make short form content on Instagram and let that be the only thing you focus on. But if you want to build a moat, something that can't be messed with, go focus on YouTube because no one else is doing that, and go take up all of the real estate on YouTube. And this is what all successful people have done. They've taken up the landscape. And that is what I've done. Am I the smartest tax professional in the world? No, but I definitely have more content than any other tax professional in the world, and I've done a lot to educate people.
How are you monetizing? So yes, YouTube's paying you.
Yes.
But like, what was in the description? Where were you sending people?
Glad you asked that. So
Karlton, appreciate you for coming.
yeah, man, happy to be here. Thanks for having me on.
Welcome to Las Vegas.
Bro, it's hot here. How do you guys survive during these summer months?
This has been the coolest summer in 10 years.
Are you serious?
Yeah.
I actually kind of like it right now. If it gets any hotter, yeah, I'm back to California or back to Florida.
I know. Like, dude, OC is our getaway because it's a short flight, you know, and the weather's insane. The water's insane. But you just told me that this is your second year.
Yeah.
Doing 8 figures in your business.
Mm-hmm.
And if you boil down what you do, you're a tax strategist.
Yes, through and through.
Through and through.
Yeah.
There are a lot of tax strategists. There's a lot of service providers. There's a lot of people that sell something. And something I've noticed with your brand over the years, and I've been following for a long time, is you have a really good way at educating and leveraging learning online to then maybe work with you.
Yeah.
And you've built your personal brand over these last few years. Just want to start there. What was the moment where you're like, this is the way?
Yeah. So it was in 2020. There wasn't anyone that was putting tax information on the internet right when COVID happened. I wanted to be that person that was sharing with everybody how to set up an LLC, when to switch your LLC to an S corporation, how to place children on payroll. And when I Google searched this stuff on YouTube, because YouTube is owned by Google, nothing popped up. There was all these like older guys that were giving these random videos on like these chalkboards. And I'm like, this is the information we have to learn from. So I decided with my camera phone to just start uploading YouTube videos, 9 minutes, 10 minutes long. And fast forward 3 months into the pandemic, I already had 100,000 subscribers on YouTube.
Dang.
So I realized building a personal brand is extremely important because it can educate people more about what I want them to learn. And then at the same time, it'll turn around and cash flow me eventually when they build trust with me.
So it sounds like you got your initial video ideas from the questions people already were asking you.
Yes, I did, because I was on the phone with people every single day, and these questions that people were asking me weren't on the internet. So I was like, okay, well, if there's no video that can point them on what to do, I should be the one to go create those videos.
Yeah.
And so I did.
So how long were you in your business before you started making those YouTube videos?
So I was in my mother's company first. My mom's company was like my playground for learning tax. I started off as a salesperson, then eventually got my enrolled agent's license, then eventually hopped on the calls to start delivering tax plans. And it wasn't until like right as the pandemic started that I realized I want to be a self-employed business owner. I'm telling all of my clients that in order to take more write-offs, you got to have a business, you got to invest in real estate. Yet I hadn't done those things yet. This pandemic gave me the opportunity to become self-employed because I was introduced to YouTube, and within 3 months of me uploading videos, YouTube was sending me emails saying, Karlton, we need you to register 1099 so we can send you paychecks. We want to pay you $10,000, $15,000 a month for these videos. Blew my mind that I can make money off of videos just sitting on the internet. Everything changed from there on.
So good. Yeah, I don't know if there was any other vehicle in human history where you essentially get compensated to market your business.
Yes. Yeah. And when I think about passive income, like I told people real estate's passive income, but over time, like I learned passive income is like a myth, right? YouTube almost felt like passive income for me because I would create one video one time, upload it one time, but I could get paid every single day from making that content. it really did feel like passive income for me. And so this was like my playground to play in. I wanted to get better at YouTube. I wanted my voice to sound more compelling. And most importantly, I wanted people to understand me more because I knew taxes was super complicated and my skill set was simplifying things to almost like a 5th or 4th grade level.
So good. And why YouTube initially?
So my brother told me YouTube is the perfect place to build a brand because when people Google search things, Google will recommend videos from YouTube. If you build a personal brand, Karlton, on Instagram and you type in how to pay yourself as an LLC, your Instagram video may not pop up. The YouTube video is going to go and pop up. So if you want to compete with everybody, sure, just go make short form content on Instagram and let that be the only thing you focus on. But if you want to build a moat, something that can't be messed with, go focus on YouTube because no one else is doing that, and go take up all of the real estate on YouTube. This is my older brother, Kenny, telling me this. What he meant by that is, if there's no video on how to place your children on payroll, you need to have a video on that. If there's no video on what's the difference between an S corporation and a C corporation, you need to have a video on that. If there's no video on when to set up a self-directed IRA, Karlton, you need to have a video on it, because if you can go take up all of the real estate, whether you're the best at teaching it or not, you've covered all of the land. And this is what the Rockefellers has done. And this is what all successful people have done. They've taken up the landscape. And that is what I've done. Am I the smartest tax professional in the world? No, but I definitely have more content than any other tax professional in the world. And I've done a lot to educate people.
Dude, so good. And I would even say, if you go and look and you see other people and you know in your heart you could do it better. Yeah. You could explain it better, and then do that too.
Yes, absolutely.
How many videos was it till you, I don't know, did you ever find that moment of discouragement where it's like, was there ever a moment where it wasn't working, or because of the timing of 2020, like, did it just work right away? I'll
be honest with you. I didn't know what I was doing. So when I first uploaded videos on YouTube, I had no camera and I had no paid microphones. I was just using my iPhone camera. YouTube rips you for not having the right type of video quality and, volume. So the first couple of videos I uploaded from my phone, the comments were straight coming at me. Who is this kid flipping a board over, trying to teach me that? I could barely hear you, man. Pay for a basic mic. I was broke boy at that time. Yeah. So I couldn't, invest a whole lot of money into equipment. It wasn't until I got that first check from YouTube for $10,000 that I went and reinvested into some camera equipment. And that's when I started to see people started to appreciate my videos more. They were telling me in the comments, this looks a lot better. And I started listening to them. Karlton, can you create a video on, capital gains and how to avoid capital gains taxes? I just listened to my audience and just only created what they wanted me to create. And that's what helped me out a lot.
Really cool. The $1,000 iPhone made you 10K on YouTube.
Yes.
Took the 10K, level up the content.
Yep.
And it's a form of service too, just as far as the viewer's experience and wanting that to not be distracting.
Yes, you're absolutely right.
At this point, and I'm sure I'd love to talk about it in just a moment, about how like YouTube's landscape has changed as far as you could be discovered with your first upload.
Yeah.
And it could just go nuts.
Yep.
And then you could, without knowing, create a standard for people, and it could be a bad standard.
Yes.
To begin with. We'll get into that. But at what point did you feel like, or I guess this is the one I think about is just the editing part. I was like, man, I just got to edit my videos, or I don't know who to edit. I don't know how to edit. Like, what were you doing for editing?
Yeah. So right when I started to realize that people like these videos, my buddy from high school, his name is Mike Zuniga, reached out to me. He had just graduated from college and he was building up his business as a videographer. And he said, Karlton, I'll do editing for you for free as long as you repost me on social media. I want to build up my business. Win-win. I knew that I was building up my social media. He didn't have that social media following that I had. So he started helping me with these video edits. The video edits were amazing. Sure enough, when I started making enough money, I said, Mike, listen, let's just go under contract. Every single month, I want 4 YouTube videos edited from you, and I'm going to pay you $2,500 a month. And that was my first time having a 1099 contractor. For the very first time, someone was working for me, doing something for me so I can buy back my time. Now I was just focusing on creating my scripts, What am I going to talk about? How am I going to make sure I'm compelling? And what's going to be my call to action at the end? What do I want people to do after watching this video? This is how I built this business on YouTube. It was just me and Mike first. Eventually, I decided to go to Upwork and hire a copywriter. And the reason I did that is because, I started running out of ideas. I was like, okay, I'm only talking about things Karlton wants to talk about, it feels like now. How can I get a different perspective? And so I reached out to someone on Upwork and found this guy named Bennett. And fast forward to today, Bennett has been with me for now 5 years, and he's a big part of the Tax Alchemy brand. And he helps curate a lot of my presentations and my voice on YouTube. So he helps me write my scripts.
That's so good.
Yeah.
Like, would you say, because it's not the first hire people think of, more they think they need to hire like an admin person, which could be in the season or whatever, but when it comes to like business, you don't have a business if you don't have leads.
Correct.
You don't have leads if you're not marketing.
Correct.
And marketing in this day and age it's video.
Yes.
And that being your first hire, how about this? In your business, how much money did you make with your small team that was primarily a marketing team?
Yeah. We went from that $10,000 a month to eventually a $15,000 a month. And then something happened. We just went absolutely parabolic. We created one video called How to Pay Yourself as an LLC. And we knew it was doing really well, but then something changed. Next thing you know, that video went to 1 million views. And then from 1 million to 1.5 million and 1.5 million to 2 million. Next thing you know, those YouTube checks got bigger, got up to 25,000, 30,000, 40,000. Now I'm like, okay, I'm making $40,000 a month and I don't have that much overhead. I have one video editor and just one copywriter off of Upwork that I'm paying hourly for whenever I need him. This is now a very efficient machine here that allows for me to take some money out. And now I'm going to go do some of those things that I tell my clients to do. I'm going to go reinvest. I'm going to buy my first investment property. And that was when me and my wife got into our first short-term rental in 2021.
Dang.
Yeah.
That's what's up. Hey, Department fam, question for you. Based on you listening to this podcast, you probably are either looking to grow your personal brand this year, build your audience online, and just stop chasing business and start to have business chasing you. If that's you, I want to invite you to the Content to Cash Challenge. This is a 5-day coaching experience, a live coaching experience with myself that's done all on Zoom, and you get access to a private community, and it really is unlike any other experience that I offer. By the end of the challenge, you'll have unreal clarity on what you're supposed to do online, and you'll have the insight on how you can make an extra 6 or even 7 figures. Yes, I said 7 figures in your business this year. And if any of those things sound great to you, I want you to join the next Content to Cash Challenge. Scan the QR code if you're watching on a television, or click the link in the description. Once you go through it, go ahead and upgrade to VIP because you'll get an extra hour of bonus VIP Q&A with me every single day of the challenge. And so looking forward to seeing you there. Let's get back into the combo. How are you monetizing? So yes, YouTube's paying you.
Yes.
But what was in the description? Where were you sending people?
Glad you asked that. So this was before I decided to build up my Tax Alchemy business. So everything was going to my mother's company. And it was great at first until it wasn't, because I sent so much business to my mother's firm that literally her employees were quitting. Wow. We had so much work that we pushed through from my sales team down to her tax pro team that I literally had CPAs that were like, dude, I'm throwing in the towel. This is way too much. I can't even see the light at the end of the tunnel. Karlton's over there and his team is over there onboarding 25, 30, 50 people a month for tax plans. And we have all these returns to get done, all this bookkeeping and accounting. So what I started to learn, and what my mom was learning too at the time, was the difference between having just a tax and accounting team versus having a tax strategy team. If you have people playing in both arenas where they're filing returns and doing bookkeeping, and then they're also doing tax strategy, it's a lot on the brain. Right. Imagine this. You're doing tax returns where you're just sitting in front of the computer inputting stuff. You need to be meticulous about data getting inputted so you don't make mistakes, versus coming up with an idea for someone on how you can help them offset their tax bill. Those are completely different parts of your brain you're using.
100.
If you have to use both of them in the same day with all the clientele, it could become a mess. And that's what started to happen. So as much as we were finding success, we also encountered a new problem. We have too much business.
Dang.
Yeah.
How much money would you say? Because this is encouraging.
Yes.
Because most people think they need to have it all figured out. When I found when you're successful, you make a lot of money because you've left a lot of money on the table.
Yeah.
So like, how much money do you feel like was left on the table because you didn't have the right system in place?
We left millions of dollars on the table by not being prepared for how fast my brand grew. Millions on the table. We couldn't hire fast enough. We couldn't implement systems fast enough. And to be honest, if it wasn't for my mom slowing down the ship, the whole thing would have honestly imploded because I was pushing forward. I was young. I was hungry. And she had foresight to know, hey, if we just keep going at this pace and allowing this door to just be open without shutting it, everybody's going to be gone. How are we ever going to fulfill on all this work? And so she was the one that eventually said, no, stop the brakes. We don't onboard any more people. Here's our cutoff now. And it completely changed our business model. We used to be a free walking business. You can come in, we accept any clients. No. Now we have a criteria on what type of clients we accept. This is the amount of clients we will accept this year. And we're not accepting any more than that. So it really changed our business.
Yeah. And that is taking a business from being a commodity to standing in your own category. And it's the oversubscribed model that Daniel Priestley talks about. When you are in such demand, you don't necessarily want to handle the demand. You want to decide what you want to do.
Correct.
And then let other people go wherever they need to go. But it's just really good. The secret sauce in this whole thing in your story, which is really cool, is your mom, bro.
Yes. My mom is the key to it all because she's the one she's had the knowledge, bro. Like my brain is like my mother's brain, and my communication skills is the same way my mother communicates, right? And so if you go and study my mom, you'll see her voice, her teachings. I mimic a lot of that, bro. Success leaves clues, and watching how she built her business and her personal brand allowed me to take some of the best things that she was able to do and to put it on steroids as I was building up my brand.
What did she do in her time, like in her era, building her personal brand?
She was super bold. She was willing to call out CPAs versus tax professionals. Your CPA is just somebody who files tax returns. You don't have a tax strategist, someone whose sole job is dedicated to help you leverage the tax code. Your CPA is working off of historical data, something that's already happened last year. Who is working for you, being proactive, coming up with strategies before the end of the year?
Right.
This mindset shift that she was telling everybody was, in a hotel or on a radio show, but it wasn't on YouTube. It wasn't on Instagram because my mom hadn't done YouTube yet or done Instagram. I was the person that kind of figured out Instagram and YouTube. So I was the one that took my mother's voice and said, let's go and put this on a much bigger platform. And that's where my YouTube started to take off. My Instagram started to take off. It was from the same philosophies my mother was teaching all along.
So was it, you just sent people to like a survey or like a book a call or?
Yeah, so we had a landing page survey. You're making over $150,000, great. You can book a call with us. If you're not, sorry, see you later. And that was how we started onboarding people. But what I realized over time was the clients who I really wanted to work with were the ones that called into the office that said, hey, I'm a musician, I'm an artist, I'm an athlete. I need somebody that's going to give me personalized attention. I want you to call my CPA and go request those documents. I want you to fly to me. Can you handle all of this? And at the time, our model really wasn't like that. Our model was we build out a tax plan, we show you how to implement it, and then we come back and file your returns. We're not going to do all the implementation for you and contact your CPA to ask for documents and do all this heavy lifting. That's more of someone who has what's called a family office, where you have dedicated CPAs and tax pros that are really only dedicated to you.
Right.
And so when I started thinking about it, if people really want that, what if I can create that model, right? I'll just charge a premium for it. And so this is when my private client group got created inside of Tax Alchemy. I wanted to be able to assist those higher net worth individuals by doing more for them. Instead of you just getting a tax plan and you having to go figure it out, let me figure out how to get you the property and make sure the LLC is being set up correctly and make sure that your bank accounts are open, that you paid your children, and really take the responsibility of making sure everything's been done versus giving you the plan and expecting you to execute it yourself.
Dang, that's so good. How did you get comfortable charging a premium?
I'll be honest with you. The only reason why I got comfortable charging a premium was hanging around premium people. When you hang around people that show you what your value is, you start operating differently. Myron Golden's a good example of this. When I worked with Myron, and I sent Myron an engagement agreement, he got on with me and told me, Karlton, I would have paid double what you had charged me. And it shocked me that he said that in the first meeting. I'm like, okay. But he got me to understand over time that it's not about the dollar amount. It's really not. It's about how big of a problem am I solving for someone, and what do they associate that value to? Taxes is a big problem for people. It's a 6-figure and 7-figure problem for a lot of taxpayers every single year. What would you do to eliminate that problem, not for 1 year, but every year, knowing that somebody had information to be able to help you? And what does that do for you, putting that type of money back into your pocket, 6 or 7 figures back into your pocket? Sometimes that's life-changing money, right? And so when I started to understand, how valuable tax strategy was and the lack thereof people that were providing it at the level that I was, it only made sense for me to charge what I currently charge. And we're probably one of the more expensive tax strategy firms.
I love that. And you would say also having a brand makes it that much more easier too for somebody to work with you at that level.
I would agree that having a brand creates more loyalty and trust, to where somebody who is trying to make a decision between working with Karlton and Tax Alchemy versus working with John Smith CPA firm, and you're looking up John Smith CPA firm and they only have 36 Instagram followers and their website looks very boring and bland. And then you bounce over here and you see Karlton Dennis with all these testimonials. He's giving you all this value on YouTube for free. It makes you feel differently about somebody. And it also starts to register in your head. No wonder why this might be more expensive than going down the street. This person's providing so much more value, and I've seen the value he's provided.
So good.
Yeah.
If you were starting from zero today and it was 2020, but it's 2025, you're leaving your mom's thing or you're going to help your mom's thing, what would you do today if you were starting from zero?
If I was starting from zero, it's always starting with a high income skill. For me, tax strategy and sales were my 2 high income skills. I got sales knowledge first before I got tax strategy knowledge. And I'm grateful I did, because communicating is everything.
Right.
So I got my high valued skill, which was sales. And then I got my second high valued skill, which was tax strategy. The next thing I have to do is I have to build trust with people. I'm just going to give information away for free. I'll build free programs, free courses, free ebooks. I'm just going to give. You build up your following by giving. Then you turn around and you funnel them somewhere. What I would probably funnel them to is a calendar, and I'll probably have that calendar be associated to me, and I'll take those calls myself, and I'll start closing people on tax planning deals myself until I can build up a nest egg to hire my first tax strategist. Then I bought my time back. Now I'll have someone build out the tax plans for me while I'm doing the consulting. And this is honestly how I built out Tax Alchemy. It started out with me doing everything, and then eventually I got 1 person, 2 person, and now I have 50 employees, building out tax plans and assisting clients year round.
So good. How did you get good at communicating?
I got good at communicating because when I was young, my mom told me that I was going to be the leader. She said, Karlton, you're going to be the line leader. You're going to always be first. You're meant to be vocal. Because my older brother, Kenny, he was more introverted. And when I came out, I was just more extroverted. My mom told me that will be your skill. Lean into that. You have the gift of gab. You have the gift of communication. And over time, I believed what my mother told me. You know what I'm saying? She told me, Karlton, you're a smarty pants. You always get straight A's. Well, then I always studied all the time because my mom told me I was a smarty pants. So I leaned in on the things she told me. Parents have such a profound influence on their children. If you speak life into them, they can become that. She spoke this into me. She spoke what I was into me, brother. And so getting into high school, I wanted to be the team captain on the football team. Getting into college, I wanted to be the team captain on the football team in college. Getting into my mom's office for the very first time and finding my footing. How can I lead her sales team? It's always been something that I've been passionate about, which is being a leader. So as a part of being a leader, you have to communicate.
Well, and effective. Because a lot of people are, whenever I ask a room, who here believes they're really good at what they do?
Yeah.
Internally, everyone just, I'm really good at what they do. And the reality is not everyone is good at communicating what it is you do or communicating things in a way people can understand.
Yeah, absolutely.
And what's cool about taxes, because I've been on my journey as someone who realizes life in the business sense, entrepreneur sense, number 1 goal, figure out how to make money. Don't worry about anything else. worry about how money is made, learn sales, communication, marketing, fulfillment, ascension, retention, all that stuff. And then once you feel like you have that down, now it's time to preserve your money.
Absolutely.
And take on those strategies. I was telling you how like the year I made the most money for the first time in my life, I was broke. And it was 2019. I made $130,000 as a 1099.
Yeah.
And my tax bill was like $25,000. And we had $25,000 in the bank. And then it was March of 2020 when we found that out. So we had to file an extension.
Yep.
And I was just like, I'm missing something because I'm seeing people not pay taxes.
Uh-huh.
And then my obsession for learning the tax game has even resulted in what I help people do and teach as far as personal brand and things like that. Because would you say,
love that.
check this out, this is actually funny. I don't think anybody's presented this to you. Most of the time I see tax people say, you want to write off a vacation? Start a travel YouTube channel. And I know what it takes to do something at a level where it's good, right? As far as build a YouTube channel.
Absolutely.
You're going to have to like take the time while you're on that trip to like review restaurants and different hotels and things like that.
Absolutely.
Would you say, this is just my observation, but the greatest tax strategy to write off vacations and trips is to have a podcast?
Oof.
Because when I go to a city, sit down and have a conversation that does market my business.
Yeah.
That trip is
deductible. Yeah, because you're going there for the podcast. You're not going there for the vacation. It's arguably one of the best businesses to have, because let's just say you want to go do a podcast in Fiji. You can get me to meet up there. I'm going to be able to write off the trip too, because I'm going there for business. You're going there for business. Brother, you can travel the world with a podcast and make your traveling trips deductible as long as the intention of where you're going has been set. I think what most people try to do is they try to do the latter. They went somewhere for a vacation and then they want to convert the vacation into a write-off. IRS says no on that. But if you go somewhere for business intent under Code Section 162A, that business intent is ordinary, necessary, and reasonable to the business in the pursuit of income. That's a tax deductible trip. You should take advantage of that.
Yeah.
Yeah.
But we could talk about whatever my business is about.
Yes.
So
whatever
like,
your
that's what's cool, because like I felt like the travel play, that's very limiting.
Yeah.
You know, like not too many people would be able to like make that really happen or actually like to do that. But I mean, how many conversations are you already having anyway?
Yeah.
So anyway, that was just.
I love jumping on people's podcasts when I know I'm going to go on a vacation. It's like, okay, hold on. I'm a tax strategist. I can't take vacations. I have to take business travel. Who is in Las Vegas that I can meet up with? Who is in Miami that I know I can meet up with? Because I'm going to be out there for a couple of days. IRS states that I need to be doing business for more than 50% of the time. Well, done. I'm going to make sure I'm doing business. I'll tee up a bunch of podcasts, even though I might go to dinner with my wife or, hang out on the beach. I got the work done. And that's what allows for my lifestyle to be a write-off.
So good. Lifestyle, write-off. And one other question I'm going to ask, and then we'll go from basic to like gradual.
Yeah.
As far as tax game goes, because we got all the content game. You start with your smartphone.
Yep.
Just serve, give things away, send people to one link, and then let that run.
That's 100% the play.
Yeah.
I don't want people to get confused.
Yeah.
Here's the value I'm providing, and here's the one place I want you to go to get more, to learn more.
What do you think? Okay, yeah, yes, because people love a link tree.
Yeah.
And then the link tree has a million places you can go, and people wonder why no one's even buying their $47 course.
Yeah.
Well, it's because you're sending them in 10 different directions. You're making them have to decide, and every decision lowers conversion.
That is correct. We got rid of Linktree over a year ago.
Yeah.
Yeah.
Same.
It's too confusing for people. They were like, oh, do I set up an LLC on this? Do you want me to book a call? Do you want me to go to your YouTube and watch more YouTube videos? No, I don't want you to do any of that. I just want you to book a call.
So if justifiably people are attracted to my business and brand because of who I am, and we're in a world where personal branding is like such a thing.
Yes.
And a perception we're creating based on how we carry ourselves, what we wear, potentially where we live and what we drive. Like in that all, like how are people able to leverage that side of things? Let's just like leverage your personal brand to write off things you like watches or clothing or things like that.
Yeah. So if you have a personal brand, you probably have a vehicle and you probably travel. one of the beautiful parts about having a personal brand that I've experienced is being able to hop on podcasts because of my personal brand. I went from the Ryan Pineda podcast to your podcast because of my personal brand. I'm super grateful for that. But that means I get to write off one more day while I'm out here, right? Versus having to fly back home. This is a part of having a personal brand. But what about my vehicle as well? If I'm a business owner, I could have a personal brand that allows for me to have a vehicle. What I've seen a lot of people do is they'll use their vehicle in order to build their status. I see a lot of guys in the insurance space where they'll buy a Lamborghini or, buy a car that weighs over 6,000 pounds. But the IRS states that if you're using that vehicle for more than 50% of the time for business, it's deductible. So yes, if you are doing the Instagram videos and the YouTube videos and you have your car in the background, you're promoting it with your content, that is you using the vehicle for marketing purposes that could help you make more money. Absolutely, the IRS is okay with this, but we also want to make sure that we're tracking the percentage. How much are you driving it for personal versus how much you're driving it for business? Because the IRS cares about those finite little details when it comes to you taking these types of write-offs. So can you have fun with a car or a traveling trip? Absolutely. But where I start to kind of question things is when people start to buy the Rolexes. When you start buying watches and things like this, it's really, really hard for the IRS to say that Rolex is the reason why he made an extra six figures when you're not in the watch business. Right. It's okay for you to attract clients because you have the ability to afford a Rolex. You have the ability to afford a nice watch, but your nice watch is not the byproduct of how your business runs. Yep. Your business runs from you doing marketing, sales, to doctors, nurses, whatever it might be. It's not because you bought that one Rolex and now all of a sudden your business is more profitable. And so I caution business owners that are out there that are building their personal brand who are thinking it's okay to just buy a watch in order for me to offset my tax bill. Try not to put that underneath your business. Claim that as a personal expense. There's far more other things we can do in the tax code to wipe out your tax bill.
Good. Okay, let's start from the bottom.
Yeah.
We'll start it from the bottom and we're here. All right. Anyway, so when should you go from TurboTax to a human being?
Okay. From TurboTax to a human being happens as soon as you have investments or a business. Because as soon as you have investments or a business, TurboTax software is going to do its whole little question and answer on you. And you're just going to end up filling out the basic deductions that you can take. You're not going to get the advanced deductions. You're not going to have somebody questioning you and really getting down to the bottom of what you actually qualify for. You're just going through a AI generated system. So if you started making investments and you have capital gains, short-term, long-term capital gains from stocks, things that you've been holding on to, precious metals, you name it, absolutely. I need you to get off TurboTax and have a human being. And then if you own any assets such as rental real estate, this is when we absolutely want to make sure the depreciation is being calculated correctly and that you're not making any mistakes inside of the TurboTax software.
Okay. And then you said if you have a business.
Yeah.
Some people think because they opened up an Etsy store or they started a eBay or they have a table at a trade show or a market, that they have a business. What constitutes a business?
Yeah, constitutes a business is if you have earned income in excess of $600 because now it has to be reportable. So anytime you make over $600 self-employed, you're a self-employed business owner now. You have to report that income, file your tax returns, and pay self-employment taxes. Self-employment taxes is Social Security and Medicare. Normally for W-2 employees, that's being withheld on your paychecks. It's 7.65% for W-2 employees, but for self-employed individuals, it's 15.3% because they're their own employees and they're the employer. So they have to pay into Social Security and Medicare essentially twice.
Wow.
Yeah, it sucks.
Yeah, so I made the mistake of that. It was like, get a DBA and an LLC and you're good. And then I made $130,000 and my tax bill sucked. And I was like, what am I missing? What did I miss? Drake, reference number 2. But it was, you didn't file as an escort.
There you go.
I was like, and then when you do that, then you can pay yourself, which I'm pretty solid, but for the sake of the audience and also Art, if you have any thoughts about this, because Art's a contractor. I pay him as a contractor. Yeah. Even though I don't want to say anything else. I pay him as a contractor. Yeah. And so, because I know it benefits both parties.
Of course.
And, yeah, my bad. All right. But all that to say, when should somebody go from DBA LLC to S corp.
Yeah. So your LLC can roll with you forever. It's just how do you want to show up to the IRS? If you show up to the IRS as an LLC, well, guess what? They're going to say, hey, where's my 15.3% on top of my federal, on top of my state taxes if we're in a state that taxes you? Brother, on 100 grand, 15.3% is already $15,300. And we're not even talking about federal taxes yet or state taxes yet.
Crazy.
This starts to add up for a self-employed individual. So what I encourage people to do is to do the math of when does it make sense to transition from an LLC to an S corp, because the math comes down to self-employment tax, which becomes payroll tax. As soon as you transition over to an S corp, you're now a W-2 employee underneath your own corporation. You get paid two ways. You could take distributions, money that just comes out of the bank. You don't pay self-employment taxes on that. You just saved yourself 15.3%. And then you get a W-2 salary. Whatever you give yourself in a salary is what's subject to the 15.3%. So if I made $100,000 profit inside of my business, I might give myself a salary of $30,000. Well, now I'm only paying that 15.3% on $30,000 as opposed to the 100K profit. That's the difference between the LLC and the S corp. I could take out that other $70,000 without paying self-employment taxes on it, and I'll just pay federal taxes or state taxes. So I've eliminated 15.3% on all of the distribution money that I take out of my business. This over time can help a business owner to reinvest back in their business, hire more employees, and get to a place where they're making multiple six figures or even millions. And that's why I like being able to educate people on the entity structuring as that kind of next step once you've, got off TurboTax.
Yeah, no. And something I find as even just somebody who helps other business owners or new business owners even, is you start businesses from your mind and in your heart. Yeah. And so it's so personalized. And then the concept of inviting people into that, like hiring people, in many cases, it's like, no, I just want to keep making the videos myself, keep taking on the calls myself, keep fulfilling on the offer myself.
Yes.
And so you get a lot of creatives or even just people with businesses that are created from a passion, and they don't see it that way because it's all mental. They feel like they're losing by hiring somebody.
Yeah, but I would argue that you're not a true business owner without hiring people, because you're essentially just trading your time for money. Right. And so if something happens to you, the business stops. So how is it a real business? Like my business operates entirely without Karlton dentists now, right? People get onboarded every single day. Customer reviews happen all the time. Clients are getting serviced. But when Karlton had to be the one to build the tax plan and be the one to deliver the tax plan, if Karlton gets sick, guess what happens? That tax plan gets delayed. If Karlton gets sick, guess what happens? That phone call or that meeting gets rescheduled. And who gets the impact of that? The customer does. So when you think about how a person wants to rise and become successful, a part of that is also removing yourself at the exact same time so you can start working on the business instead of just being in the business.
Yeah, it's so good. And from my standpoint of things, it was like, it's either I'm paying the IRS or I'm hiring somebody else to make me more money. And that's where it's like, there's this trade that happens, but you have to decide who you want to trade it to.
Exactly.
And
that's why it's so funny how people say, oh, well, we should have business owners get taxed more. We should be, taxing the rich more. Bro, the rich hire the most employees. They could just choose not to hire employees and not give you a job.
Yeah.
And then what? They'll still figure out ways to offset their tax bill. Right. They chose to help everybody. They're choosing to hire thousands and thousands of employees.
Yeah.
Amazon chose to be $1 billion corporation, which means they have thousands and thousands and thousands of trucks everywhere now and thousands of drivers for them. Please tell me that you got a package within 48 hours from Amazon versus having to wait a week for a package before COVID. Because guess what? He figured something out. We're going to get 4 deliveries done in 48 hours now. Groceries, you used to have to show up to a grocery store. What happened after the pandemic? Groceries are being dropped off on your doorstep.
Crazy.
This is what happens when you give billionaires a little bit of time and more money. They start solving more problems.
Right.
Yep.
No, that's so good. So the funny thing about taxes is it's one of those things you do need to keep hearing and hear. It's like you have to stay under the education of it all. And then when you start implementing some of the strategies, then you get even more awareness, obviously.
Correct.
Like the, paying your kid $12,000 or $14,000 tax free, and then using that money for whatever you want to use it for. It could be their education, and put it in an investment thing, whatever. But it's like, do you want to give this to IRS, or should I just pay Ruby and Russell both for being in the business or whatever?
Yeah.
Currently in the season, I just want to process it with you. We left our primary residence in November and bought a new primary residence.
Okay.
The residence that we left, we now are renting long-term rental here
Nice.
in Vegas.
Absolutely.
The sneak attack in that is it's actually somebody that works with me.
Okay.
So I pay them to work with me and then they pay me back to rent the house.
Interesting.
But I never ran the cost seg study yet, and we'll talk through that.
Yeah.
So that's just a house that is cool. It's cash flowing.
Yeah.
And then we are in the process. I think we're closing like Friday on a house in St. George that we specifically bought for Airbnb and for us to go because it's only like an hour and 50-minute drive from Vegas, which is like a nice getaway.
Awesome.
They got lakes and dunes and snowboarding and skiing and great golf courses, by the way. Bro, like Sand Hollow.
Is that where that is? That course is out there?
Yeah, Sand Hollow and Black Desert.
I've seen
Black
both
Rock.
of those on Instagram.
Black Rock, yeah.
Sand Hollow being the more popular one, right?
Yeah, which like you're golfing on a cliff.
Yeah.
It's crazy.
So cool.
But yeah, so we're going through this process. Now, the house is about, I think it was like, it's 580.
Okay.
What do I get to deduct on my taxes with the house that we're buying right now being 580 and the house that we rented out in November?
Okay. So the differences between the house that you rented out versus the houses that you're buying is one's being carried as a long-term rental and one's being carried as a short-term rental. The IRS views these two differently when it comes to how you get to benefit from the property.
One caveat before.
Yeah, go ahead.
And then start over. My wife got her license like 3 years ago. So
Oh, wow.
She's a real estate professional.
So she's a real estate
Bro,
professional.
I'm paying attention, bro.
I love this.
Let's
And this
go.
is why we get all the details as tax professionals,
Yeah.
because that one detail alone changes this entire conversation. Let's educate everybody on what a real estate professional is.
Yep.
So the IRS has this rule called real estate professional status, which means that if you're in a real estate profession, such as being a real estate agent, you're a flipper, you're a wholesaler, that counts as you being what they call a real estate professional, someone who has the status to make real estate an active business. If you have real estate as an active business and you own rental properties, the deductions that you receive can be active as well. That means if I want to offset my W-2 or some of the income that comes over from my LLC or my S corporation, if I have active rental losses, they can offset that W-2 or 1099 income. Most people don't qualify as real estate professionals because you have to spend 750 hours in the year in your real estate related business. So being a real estate agent, being a broker, or even managing your own investment properties, that's a lot of time. It's like 14 hours a week. And then there's another test that says you have to spend more time in your real estate operation than any other working operation that you have. So if you do have a W-2 job part-time or even full-time, or you're running your business, the IRS wants to see that you're in whatever real estate operation you have more than anything else. Many taxpayers just can't qualify. But with your wife being a real estate professional, what does this do for you? This allows for you to unlock the ability to do a cost segregation study. Instead of you taking depreciation from the moment you started renting the property last November and for the rest of 27 and a half years, you could say, you know what? I want to take some of my depreciation up front versus waiting for it. The cost segregation study is a strategy that allows for you to accelerate depreciation. And on average, you'll get about 30% of your building's value as a tax loss when you perform this strategy. All we're doing is just writing off components like your driveway, the fences, the cabinets, the light fixtures. And we're saying we're just going to write all this stuff off in 1 year as opposed to 27 and a half years. So it could create a sizable tax loss on your tax returns. On a $500,000 property, a tax loss could be somewhere around $150,000. So if we're considering this new Airbnb that you're purchasing, we might be looking at a $150,000 deduction with the short-term rental playing on the tax returns with your wife qualifying as a real estate professional. Yeah.
So between that and the other one, I'm at like, I'll probably zero out this year.
You might be able to with just those two strategies alone, the two cost segregation studies, you might be able to, because you could take accelerated depreciation on the long-term rental and you could take accelerated depreciation on the short-term rental because your wife qualifies as a real estate professional. For other people who don't have the same setup as you though, how could they still do this? They have to do the short-term rental strategy, because if you're working full-time, the short-term rental is the only way you're going to be able to get real estate losses as active losses. The IRS says if you manage your property for 100 hours and your tenants are staying in the property for 7 days or less short-term, then you have an active short-term rental. Now you can do the cost segregation study, accelerate depreciation, offset your W-2, or even your 1099 taxes with a cost segregation study. I have helped over 400 individuals do this strategy alone since I've had Tax Alchemy.
Crazy.
Yeah.
And then the real wealth play is hold on to that property.
Yes.
It's going to go up in value. And then in the future, you could do whatever you want.
This is what I tell people all the time. If you're a real estate investor, then you believe in holding on to your assets. That's why you got into real estate. If you're a real estate flipper, go flip rentals. But if you're an investor, you're going to accelerate depreciation so you can go and park more money into more real estate and hold on for the long haul. You can do the 1031 exchange where you can buy another property, sell your existing property, and roll all the capital gains into the new property without having to pay any taxes. So you can even keep yourself in real estate for long periods of time. But what most people don't do is they never set up the trust so their children can inherit their assets and get that beautiful step up in basis so they have a true transfer of wealth. This is what I advise most of my clients to do, is to get a great attorney that is going to be able to make sure that your membership interest of all your LLCs gets transferred over to your trust. So those children that you have will get that step up in basis. So that way, when you pass away, they won't have to pay capital gains taxes on all the properties that they inherited. They'll be able to sell them without paying any taxes or keep them if they would like to.
Yeah, sick. Literally a month and a half ago, we set up our trust and did all that stuff. Dude, you'd be like, bro, proud of you, bro.
I think I am very proud of you, man. I'm wondering how you got all this done without working with me.
Dude, YouTube University.
Yes.
But also friends. And, we have a lot of friends that, teach kind of the same thing.
Yeah.
And as someone who bought their first home early on, I think my exposure to real estate early, at 20 years old, to then finding success early in my and then not knowing that there is a way.
Yeah.
I think that void made me like dig for all this stuff.
Yeah.
And
it's cool to see.
Yeah, no, and it's fun.
Yeah.
Like my thing is like this is fun. Now I will say, I asked Carter this, but I said sometimes it's like offense and defense.
Yeah.
Offense is making money. Defense is preserving it.
Correct.
And so like in my mind this year, we're good to go.
There you go.
And there's a part of me that's like, maybe we could just like chill out in the business, because if we go hard offensively, I don't want, and it's creating this dynamic that you could probably imagine what I'm dealing with, right?
Oh, 100%.
So next year I'm like, do we control how much we make so we can control how much we're investing in, and all that stuff.
Your tax strategist is literally your coach. I'm the one that's telling you, yes, we're staying on offense, let's go make more money. Or no, we're getting on defense, we're doing wealth preservation right now. Yes, we're going to reinvest into rental real estate. Or nope, we're not investing into rental real estate. We're going to reinvest back into the company and we're going to go run more ads. Your tax strategist could be a part of your team and help you determine whether or not you need to go push and make more money versus, play on defense and do wealth preservation strategies.
Yep. And might I say, the tax strategist on your team is a write-off.
Yes.
What are we doing?
Legal and professional fees.
So to work with you is technically free. Or it technically pays you to work with you.
It's an investment. Absolutely.
Yeah.
It's never a cost. It's always an investment with a return on your investment.
Yeah, right.
Yes.
That's good stuff. What else? Tax. I'm trying to think. There's this one. If you buy designer clothes without logos, but you put your logo on it, that shirt can be written off.
Ooh, I like that. How it would work in order for you to do this is the clothing that you purchase needs to be considered uniform. I don't care what it is. It has to be your uniform, which means you need to be wearing it on a regular basis. So if you decide to go buy Prada or Dior and it doesn't have any of the Prada or Dior logos on it, you decide to put all your, logos and your initials on the inside, is that your uniform? Because if I audit you and I'm the IRS, you're going to have to prove it if that's an expense that I'm questioning. So I need to see, did you put uniform down in your operating agreement? Because these are things that I like to look for as a tax professional. Maybe you define that you're going to have a uniform inside of your operating agreement with your LLC or your S corporation. When did you purchase it? And when did you get it embroidered? What was the cost? Did you document it? And do you have photos to show me that you're wearing this as a uniform? This is what the IRS looks for. Documentation with substantiation is how you win against the IRS. Failure to have one of the two lands you in trouble with the IRS.
Okay, so hypothetical situation is, like, I have a really nice I have a jacket that I really like. I like the way it fits. I like the way it looks.
Yeah.
And in my mind, I'm like, dude, if I can wear this kind of jacket, I would wear it in every color. It would be my look.
Yes.
Is my look constitute for a uniform?
Yes, it does. Yes, it
Shout
does.
out to the look.
Mm-hmm.
Yeah, I could just break these, bro.
So I have a look that I go for every time I'm doing live events, which is I want to be in like a really crisp blue suit. So I buy Canali suits, and my Canali suits range from $2,000 upwards to $5,000. I own at least 10 Canali suits. So I've spent almost 6 figures on suits. Every single one of those Canali suits has embroidered on the inside my first name, my last name, and my business, Tax Alchemy. Those are my suits that I wear every time I do a webinar, every time I'm doing a live coaching call. Karlton Dennis wears those blue suits. That being said, in my operating agreement, it states I will have a budget for purchasing blue suits every single year that will range between $20,000 to $50,000. Now I've written it down in my operating agreement, my uniform, how much the budget is for my uniform, and how I operate inside of my business. Yeah. This to me is overkill, but it's also part of the reason why people love Karlton Dennis too. Yeah. Karlton's going to teach me all the things that the IRS would not even think about looking for, but is smart enough for me to include so that I have the right type of documentation and substantiation. And that's how I think. Yeah. I want to be smarter than the IRS. I know all the basic things the IRS are going to look for. How do I overkill it? Yeah. That is what gives me so much confidence. Right. If I'm going to pay 0% every single year, I better overkill everything. I want to overkill the documentation. I want to overkill the substantiation, because this is what allows me to have so much fun and confidence when I get to speak on a podcast like this.
So good. Yeah. So Art's asking, so how come then Rolexes don't count as uniform?
Yeah, Rolexes don't count as uniform because IRS has stated that when you spend money extravagantly, that is not considered reasonable or necessary for your business, it should not be tax deductible. As a content creator, it's very easy for me to substantiate having a uniform, knowing that there's a tax carve out for it already in the code for uniform. There isn't a tax carve out for watches or luxury items. IRS does not like when people buy luxury items. They want you to buy items that are reasonable based off the amount of income that you're making. Yeah. Now, if I'm making $100 million a year, would I go shop at Kohl's? Absolutely not. I might be shopping at, some very nice Italian, suits. My suits may cost $100,000 instead of $5,000 like my suits cost, right? That write-off is pretty big relative to someone who's only making maybe $200,000, $300,000 a year. A $100,000 suit would essentially wipe out their entire tax bill. Yeah. Someone making $100 million a year or $10 million a year writing off a $100,000 suit, that's just a drop in the bucket for their tax return. So there's reasonableness that the IRS takes into consideration, and it's not a one size fits all. The IRS allows for you to come to them and show why you decided to do something. The only issue is you're typically guilty until proven innocent, which is why documentation and substantiation will be your best friend.
Yeah, really good. And here's what's cool. Question. Yeah, that's really good. What if you got a fake Rolex that said your company logo on it? No, I'm just kidding. Yeah, when I think about the clothes and the look thing, I just want people to know, because you clicked on this video, and if you're still watching or listening, you clicked on it because of YouTube advice or content advice for business owners. When you have a predictable look, it's powerful.
Yes, it is.
Because then people could point you out in a crowd, and somebody that comes to mind is like an Alex Hermosi, tank top with the acquisition, got the hat.
Same clothes every single time. Yeah. Grant Cardone, white, long sleeve, every single time. This is their look, right?
Which is really cool. To know that having a look, and you could decide that strategically based on what you like, maybe, and then people will work with you because you look that way.
Like, know, and trust.
That's it. Yep. So good.
He shows up the exact same time. He's consistent. I know what I can expect from him. People like consistency, bro. Yeah. It goes a long miles when you're building trust, especially in today's day and age where we have trust fear right now, because there's so many people popping up businesses and running content and hitting you with little quick ideas that people want to be able to build trust right now. And the only way they can build trust is hanging out with you and spending time with you. And if you show up for them the exact same way, you're showing up wearing a nice button-up shirt and you're talking the right way, your videos are edited correctly, you build trust with people over time. But if you half-ass it sometimes, you got a half-ass video one time, a nice well-produced video another time, you're wearing a button-up shirt one time, you're in a tank top and a t-shirt another time, you're going to send mixed signals to somebody. He wants to focus and he doesn't want to focus sometimes. I want people to know Karlton's on 24/7, 365, because they know I'm handling their finances. Taxes is a big, big part of your life. A big part of who you decide that's going to help you build wealth is your tax professional, who you hire as your tax professional. I do not take that lightly.
That's so good. Yeah, man, I found in business it's a blessing, because in life you don't want to over leverage. When you say the word overkill, Like you want to overkill on your documents and stuff like that.
Correct.
I do think about how, personally, a lot of people, their business will grow and then their personal expenses will grow.
Yes.
And something I've loved is I really do see my business as a different entity that serves me. And so being able to leverage things on the business, it creates a sense of it creates I'm numb. I'm becoming more numb to taking risks on the business, AKA moving into this space. Mm-hmm. I was very afraid to sign the first lease in my first spot, and it was a 3-year lease. It was $2,200 a month, and I was scared. I was like, dude, I can create videos from my house.
But now it's not you signing the lease, it's your company signing the lease.
Right. And so we moved into this one, and then it's like, you're telling me I could like take on all if I think about the monthly like nut that I have now, I can get like crazy, but then I just look at like, no, dude, we're making moves that the 1% is making.
Yes.
And it's okay to take on debt on the business.
Yeah.
Sometimes it's like, even if I have the cash, maybe we should still take a business loan, because you're saying we go take the business loan.
Why wouldn't you, bro?
Yeah, exactly.
Bro, we put 4 or 5 other billionaires in here. They'll brag about how big their loans are compared to ours. That's what they're going to brag about, bro. I hang out with them all the time. They literally laugh at how much debt they have, bro, because they realize, why would I ever use my own money when someone else is going to give me money? And then they're going to give me money at very, very low interest rates. If I know that my business can produce 100% gain, a 200% gain, and I'm taking a loan at a 5% interest rate, why the hell would I not just go borrow free money, essentially, if I know that I'm arbitraging and making so much off of the difference? What you've been told about borrowing money is the reason why you won't borrow money.
Exactly.
Who you hang out with who doesn't borrow money and doesn't believe in borrowing money is part of the reason why when I even say this, you get scared listening to it. You're nervous even hearing me talk about the fact that debt's good. You have crawls crawling up your back right now because you're like, what is this guy talking about?
Dave Ramsey's like coming up.
Oh my God, Dave, you hear this guy? You hear this guy's all the things that I was told not to do. And the door shuts for you. And there it is. And now you'll never have those conversations that you want to have with those people that are in rooms that are different than the rooms that you're in, because your mindset is locked based off of what you've been accustomed to and what you've heard.
Man, so it's so real.
Yeah.
And we're not saying splurge. We're not saying buy dumb stuff. We're saying if there's something you could do in your business that would yield you more money, then borrow the money to do it.
100%.
Last thing I'll say is one write-off I found up that was really good, December 31st write-off. If it's like the number just needs swiping, is to throw the money in Facebook ad account. It's December 31st. It's about to hit midnight. I need a $50,000 write-off.
Yeah.
Just swipe the credit card, put it inside of
Facebook, and then you can
and then
start
you can
spending
take the loss in the year that you swiped it, but then you leverage that money in the next year to make more money.
Yeah. What if I give you one better than this?
Please.
What if you had an ads company that operated on a different fiscal year end than your S corp? So when you wire that money, you don't have to immediately spend it when you wire it. Here's how it works. You can set up a C corporation that manages over your S corporation that operates on a different fiscal year end. When December 31st hits, you have to file your tax returns for your S corp. Come March 15th, then your individual tax returns get filed April 15th. But what if your C corporation was set up in December 1st, and I gave it a fiscal year end of September 30th, 2026? That means it would end its year September 30th, 4 months and 15 days, would push that tax return until January 15th of 2027, which means if you go and wire money in the last few weeks of the year to your C corporation, I actually bought you 9 months to spend down that money, because then you'll be able to spend it all the way down until September 15th of 2026 before you'll have to file a tax return. So your S corp got the tax deduction, and then your C corporation's holding on to the money. So now you get to decide, do you want to put it towards ads? Or do you want to hire new employees? Do you want to do additional expenses with the C corporation income versus just saying all of it's going to go towards ads? This is how a lot of my higher net worth individuals are able to offset their tax bill, but still control some of their money before having to pay taxes on it. And whatever you do end up having to pay taxes on is only at a 21% rate. Maybe you're at a 37% tax bracket. That's a 16% delta between your S corp and you being a C corporation as an individual.
Wow.
So I like that strategy if I know that I'm dealing with someone that's, making, upwards to 7 figures, because that's a great way to income shift into a corporation that doesn't file tax returns on the same fiscal year as your operational corporation.
That's really good. So when I say swipe on December 31st, you're like, you thought I can't use that spread out through the next year? I have to like run ads and put.
Well, you probably would know better than I would because I don't spend my own ads, but I believe once the money's sitting inside Facebook, it has to be, you're going to have to figure out a way to deploy it.
Yeah.
Right?
But not in the moment where it's put in.
No, you're right. You could spread it out over time.
Yeah.
But if you put money into a C corporation, that's a management company for your S corporation, that money doesn't have to go to ads right away either. It could go towards other expenses outside of just ads.
Okay, so you're taking that tip and you're just like, here's another way to look at it.
Yeah, here's another way to look at it versus it all being limited. Ad revenue.
Right.
What if a part of it's ad revenue and a part of it's meant to launch a new facility for me for next year? What if we're going to have an event that we're going to do for next year? So now it's a management company over my operational company. Mm-hmm. So it should run ads. It should throw my events. And now I'm able to take deductions inside of that business before it files tax returns come September 15th of 2026.
Yeah, it's fire. The last write-off I want to talk about is the write-off of investing in yourself through getting in rooms. Maybe it's masterminds, maybe it's courses and coaches and stuff like that. Because you get in a business many times, not because of any other reason that you just felt like you wanted to. Yeah. But then if you want to grow, you gotta get around the right people. And that was like, everyone has that moment where they pay the coach, they join the mastermind. When was that moment for you? And how have you leveraged joining masterminds to grow your business and take tax write-offs? Yeah,
I mean, it happened right after the pandemic was when I joined my first mastermind. It was really great. Got an opportunity to learn how to ski for the very first time and just hang out with some really cool, awesome dudes. But it was the first time that I was able to be vulnerable with other men outside of a sports setting, where I got to talk about the things that were challenges to me, my relationships with family members or girlfriends or spouses, whatever it was. I was able to air these things out. It wasn't just about trying to build my business. It was trying to become a better human being, trying to become a better brother, trying to become a better son, trying to be more faith-filled, trying to eliminate some of my habits that carried on from college that I was trying to rid away with, like, drinking and stuff like that I just couldn't, I had a hard time breaking. The sooner I started to hang out with people that, shared in the same ideas and traits that I was looking to build, did their traits and ideas start to rub off on me. Now I actually saw myself having my own business with a high ticket offer. I saw myself, being an author. I saw myself, being a person that could show up to church every single Sunday and be, fully submerged with my family. And this is what shaped Karlton. It wasn't just the fact that, I wanted to become these things. I needed to surround myself with other people that were already doing these things in order to become. And so paying for a mastermind, was invaluable for me because it allowed for me to eliminate some of those habits and build new habits that, I'm very proud of here today. That being said, I've joined multiple masterminds since then, some for various different reasons, whether I'm looking to, build up on my business skills and things that I need to learn in business, or I just want to be surrounded by people who, don't talk about business. I join masterminds for different reasons now.
Good. Total, how much have you spent investing in yourself in this regard?
I would say in masterminds, close to about $500,000. Yeah, close to about $500,000.
I just always want to because I get a lot of great people on the pod.
Yeah.
And I'll do podcasts too. Solo episodes is like what I like to call them. And we love the information that's coming out of people.
Yeah.
But we never usually unpack how we got here or how they got here. And the reality is, I want to say 99% of the guests that's been on all have been through some sort of environment that made them better, that they took a risk on themselves on.
Without a doubt.
Yeah. Dude, I appreciate you for being on. How can people connect with you?
Man, they can connect with me on social media. I'm always on social. Instagram's a great way to get in touch with me. If you're looking to get help from a tax strategy perspective, visit our website at taxalchemy.com. If you have the opportunity to join one of our challenges, we typically run these quarterly. It's an opportunity for you to spend 3 to 5 days with us, and we submerge you in a lot of advanced tax strategy. We look forward to seeing you guys on there.
Let's go. I'll put links in the description. Dude, appreciate you.
Thank you. Appreciate it.